Yeah, good morning, everyone. I want others to join. Mm, Okay. Good morning, everyone. Good day, everyone. So, if you can hear me, just type I. If you can hear me, type I. Let me see. Can you hear me at all? Okay. Okay. All right. Let's proceed to the. Okay. We are starting with US index. We want to do analysis on what we are expecting or what to expected. What are we expecting on these pairs? What we want to trade this week? Now, on DXY, I said we are starting with DXY. That's US index. We can see that market is giving us what? Market has swept liquidity. For those of us that know how to mark liquidity, we can see that market swept this sell side liquidity, and then we expect market to come to this other liquidity. This is 3 months time frame to come back to swap this liquidity. On this, we have what? We have supply zone, which we expect market to come to this supply and then sell. The trend of the market has changed to bearish, but we are trading counter trend from what? From 3 months time frame. So that's why we are buying from here. For those of us that are in the group already, we can see that the market we bought from here and the market is still going up to this level. Let's go to 1 month time frame. On the monthly time frame, what we can see is we can see that market is still going up, but we want to refine our supply to the last bullish candle. How do we know supply zone, or what can we say about supply? Supply level is a level, a buy candle before the bearish move, the last bullish candle before the bearish. That's what we call supply zone. That's why I said I want to mark out this zone as my supply zone, so that if markets come back later, you can say, okay, we want to sell from there. But before market reach this level, what are we going to do? We cannot just wait and watch that this market is going up like this. You have to do something, because for the market to reach this place can take months. So that's why I say we have to do something about that. So now, next thing that we want to do is we want to look for way to buy this market from here, from the place we are now to the level. So on this level we have liquidity high. Let's change the color so that it won't be the same. We have this liquidity high, and then we have this liquidity low. We expect market to swept is either the upside liquidity or this downside liquidity. Let's check our lower time frame and see where the market is going. On this weekly time frame, you can see that we have all this thing as what, as our CLT level. Our market swept this high, market swept the high, and we expect market to go down, and even market is reacting of this what, supply zone, but it's counter trend. You don't want to trade any counter trend. Instead, we have to take our trade once markets come back to this downside and go up. Are you guys with me? Now we FVG here. So which we expect market to come back to this IFVG, then go up. So these are what we expect on this market. Let's look at our daily time frame. On daily time frame is still the same, it's all the same. So we have this level. Once we see market at this level, we look for opportunity to buy this market from here. We expect market to come here, give us confirmation entry, then we look for what, our buy we have on DXY. So this is the level we have on DXY. Let's watch out. Let's watch out on this. So this, let's look for another pairs. So can you all hear me? If we can, we are following. Let's look at Euro USD. On Euro USD, on Euro USD, yes, 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 yes. On Euro USD, we start from 3 months also, the way we started the other time. Now, for those of us that know CRT, we can see that market has swept the liquidity above this level. We can still pick this level. This is what, liquidity high, and then what, we expect market to come to this liquidity low. For those of us that know supply and demand, we can say that this is our demand zone, right? So we expect market to come all the way down to inside this demand, which is the 50% of this demand, and then the CRT low, candle range low, is what, is inside the demand zone, which means we expect this market to come down. Those of us that are selling, so we expect market to come down to this level. On weekly time frame, on monthly time frame, as we said on DXY, you know DXY is correlative pairs to all the US pairs, which Euro USD will be correlated to all the pairs against USD. So now we saw supply zone there Now we are going to look for demand zone here, which is this, the last bearish candle before the bullish candle, which is our what, our demand zone. The other time we saw supply zone, this is demand zone, this will be our demand zone. So that's our monthly time frame. From our weekly time frame, we know that market is coming here, right? But we don't want to wait till market reach here, we want to do something. So we will do a counter trend to sell this market, which we have this last supply zone here. After market has break, or let's say change of character from this side, so we expect market to go up and swept all this liquidity, which we have buy side liquidity here. Market will clear all this liquidity high and give us enter into this fair value gap before market push to the downside. So that's what we expect on this weekly time frame. Let's look at daily time frame. On this daily time frame, is all this liquidity, the buy side liquidity, external liquidity we saw on weekly time frame has turned to internal liquidity here. So which we expect market to come back to this and enter our fair value gap. We can push our what, our liquidity to this level, which we expect market confirmation entry, then we enter the market. Let's look at 4 hour time frame if we can see a better setup there. Now, as I told us that supply zone is what, bearish candle before the bullish. So this is our supply zone, which we expect market to come back to this level before going up, before going down rather. So we expect, then we sell the market from there. So this is what we have on EURUSD. So we believe that this week market will climb up before we sell. We don't want to do anything here right now. We want to do a clean setup. We want to trade a good setup. So let's wait till market reach this level. Then once market reach this level, we enter our trade and target the net low, which will be our swing trade. This is the low that we are targeting. We are going to target. Let me put the tools so that we can see what we are expecting or what we are expected. So we expect market to come all the way from there to this down. So this is actually what we want to see on this EURUSD. Anything we are selling, if we are selling here now, we expect market to clear all this liquidity, then come to this level before we sell the market. So that's that about EURUSD. About GBP USD also, let's check GBP USD. On this GBP USD, let's clean all this and start all over, starting from 3 months time frame. Also on this 3 month time frame, why do we want to start from 3 months? To know the direction of the market. Okay, now market swept liquidity according to what we are doing before. Then what is the liquidity low? The liquidity low is this, which is CRT high, CRT low. In case you don't know how we get the external liquidity. So now market took out the sell side liquidity. It's only buy side liquidity that market took out. So we expect market to took out the sell side liquidity also. So you're asking for you USD. Let me check. AUD. For swing traders, you that want to swing trade this market, let's check from daily. Okay, it's the sell will be 1 is to 15.55 weeks to reward ratio. So can you see the screen now? Oh, it's like it's a network. What is happening? Okay. Can you see the screen now? The market is 1 is to 15.57 weeks to reward ratio. Okay, yeah. 1 is to 15.57 weeks to reward. For swing traders, it's only swing traders that we can hold or we want to hold. Like the one we did February that was close the March. Yes, we enter one swing trade, some swing trade, not one, on February, which is from here we sell the market from this level, this high, then we close the trade from here. So it's also swing trade we did that time. So some people are entry and exist, some day trader or some that do close their trade weekly, and we still look for what's it called, opportunity for them. So once we enter this market here, so we will hold till this place, and some people that did not have the mind, so we still look for opportunity for them. So that's about that. So now um we start from monthly 3 months time frame. We said this place is demand zone, right? So from there, you said market has not swept the sell side liquidity, which we expect market to come back to the sell side liquidity before pushing up. Now market has swept the buy side liquidity, now remain the sell side liquidity. Our market is inside the demand zone, which anytime, any moment from now, market can still move up. So, but we don't want to enter the buy yet until market swept the sell side liquidity. Now, let's go to monthly time frame. On this monthly time frame, we said our supply zone is what? Last sell candle before the impulsive move, which is this. Now this is our liquidity level and this is our supply level. On weekly time frame, we expect market to come down, right, to this level and sell. So this is our supply zone. Now this is first supply, market has used the supply zone. Second one, the third one, we expect market to come back to this level, to this supply zone, for us to be able to sell. Okay, you can say this monthly. Let's check daily time frame. Okay, before we go to daily time frame, let's see what is actually going to happen, because you cannot watch the market to go down all alone by itself. You can say we have this market supply here, which I don't expect market to come back to this level again for now, because market is far from there. But if market, okay, market can still go there because market is acting on the demand zone. So we have this supply zone. Let's see daily time frame and see what is actually going to happen. On this daily time frame, we expect market, okay, we can refine the supply zone to this level, and we have this liquidity above this level. Shift. We have the liquidity above this level and market is reacting this demand zone this demand zone. Yes, so we don't want to buy is counter trend on this daily time frame, but we want to wait for the sell to hold. if you are buying on this level, that means you are risking, you want to risk. Okay, day trading, I'm still coming over to that level, but for swing traders first, let's continue our analysis. I'm still coming over to the level of day trader or scalpers. So now, if you want to buy this level, this market, you will not hold till market reach this TP. That means you want to scalp, or you want to day trade of the on this market. So let's see if, for those people that want to enter the buy now, let's see, market is acting on this level. So until market close above this level, that's when we want to buy. This is the last supply zone. If market close above this level like this, what is it? That's about GBP USD. But the main thing we want to do is to sell this market from this level to this downside. From here also we want to buy. So we expect market to come back to this level and then we sell. This is the major thing that I have. This is the major one that I have, that I want to trade. So that's that about that. So on USD CHF, let's check USD CHF before we go to gold. 3 months time frame. On USD CHF 3 months time frame, can we see? Let's delete all this. Market swap liquidity below this, that's sell side liquidity, external liquidity. Then buy side liquidity also is here, which is external liquidity also. Now markets have a supply zone here, which we expect market to come into this supply zone, then we sell. From there, monthly time frame. On this monthly time frame, we will find our entry to this level, last supply zone, which is this. We expect market, as market close bullish, very bullish above this level. Let me mark it out. Bullish closed above this level. What do we expect? We expect more buys, which is we have this demand zone which market is supposed to use to buy. So let's check our daily time frame. On our daily time frame, we have this zone also as what? As our demand zone, which we expect market to come back later and buy. So that's on weekly. On daily time frame, let's see if this zone is still valid. The zone is still valid because it has not been used. We still have the zone, and this will be our inducement that market will use to induce some people that are selling, are buying. Yes, I want to buy from this whole level. Let's see 4 hours. On this 4 hour time frame, we expect market to come back to this low also and then buy. So this is our setup for then we buy. So we the buy that we want to buy is to come to this level, then we now sell from there. That's swing trading. I'm just showing us the direction of the market so that we can know where and what are we going to do on the market. Now all these things, if you say we want to buy from here, we want to buy from here, all this thing that you are seeing now is liquidity. These are liquidities. So it's not a good zone for us to buy. These are build up liquidities. So once you know liquidity in market, so you'll be able to sell. You will, as a day traders, what you are expected is to see market on this USD CHF, to see market push down to this level, then from here you buy. But as a day trader, the push down should not be what you want to sell here. Okay, now market is reacting on this supply zone, right? Now as a day trader, you will have entered this market because what market close bearish below this, then the retracement is what this. You have to, you will enter your sell from here. As a day traders, some day traders have entered the trade from here like this. Your stop loss above, then you target the next low. This is how day traders always trade. This is how day traders do trade. So as a day trader, you will just target the level because we know that market is coming down to this level, right? But you want to target is either 1:3 or 1:4. Highest mostly is 1:3. You day traders always target. So now market react off this supply zone first, then go back, change character from here, then come back to the supply zone also. So from there, sell as sellers and enter. So that's that about that. So let's see another pairs. Let's check. Good. Okay. On this gold, what did we do? Okay, we bought last week. Okay, let's see. Remove all drawings. Let's check from daily time frame. Okay, for monthly time frame. On this monthly time frame, what are we expecting? We see that market swept this liquidity on monthly time frame. See that market swept this liquidity low on monthly time frame. What are we expecting? We expect market to come back to this high, to sweep this high. Can you see this one candle? All this candle is inside bar to this candle. So we see that market has swept this liquidity from monthly time frame. We expect more push to the upside. The market should push to the upside. Buy. So weekly time frame. On this weekly time frame also, market swept this liquidity very well, that we can see that market has given us CLT as dragonfly doji. Then market close inside. Then market has been pushing. We start the selling, we start the buying from this level last week, I guess. Yes, I know that we start the buying. Then some people are targeting this high as their first TP, which is very very correct. From here to this side, this is a CRT low and this is CRT high, to which we, some people that are targeting this high is very very correct. Let's see where we can join this trade as a day trader, because gold is not uh, cannot be able to swing like others. So as a day traders on daily time frame, nothing too much. We don't have much to say on daily time frame. Let's see 4 hours. Let's see 4 hours. Okay. Now on these 4 hours, let's read together. Now market react of this demand zone. From there, market react of this demand zone. From there, this demand zone also. So from there, we have the last demand zone here. We have the last demand zone here, which market has not react. Okay, that's why I put my alerts here. Okay, okay. This demand zone here, which market has not react of. Market came back to this level, make us know that market is uh, liquidity level. Market react of this liquidity, but market will later swept this, come back to this level because it has created liquidity for us, inducement liquidity. So with that created liquidity for us, then we want to push up back. The SAUSD is bullish, so we expect market to come back to this level, and then we buy the XAUSD. That's that about that. AUD, AUD, NZD, and then EUJPY. Okay, AUD, NZD, AUD, NZD. Oh, mine up here. Let's check. AUD. On AUD, NZD, let's check from monthly time frame. Okay. For on 3 month time frame, this market is heavily bullish. This market is very, very bullish on this 3 months time frame. So we expect this is the first liquidity, the liquidity that markets want to is going to. So market starts from there. So we want to see the reaction if market will swap this liquidity and come back close inside. The first thing you want to know from this 3 months is you want to know if market will close above this high like this one has done, or market shape close with wick and close as a body inside the candle, inside the previous candle. So if market close as a body, that means the market is continuing bullish. But if market close as a contraction inside, that means the market give us CRT and it's about that, and market is reacting off the supply. It's giving us some things to think about. Let's see our monthly time frame. On monthly time frame we still expect that. So first thing on 3 months, let's just mark out the low also in case if markets later say they want to. Okay, so on monthly time frame, so we have this as our okay, for continuation of this bullish, you know that this market is bullish. We expect markets to sweep all this level. Let's wait for today's candle to close. Once this today's candle close as a bullish candle, bullish above this level, that means we are still going bullish. But if market close as a contraction above this level, so we look for sell. On AUD USD, the direction is still bullish, but once we see contraction candle above this level, so that means we are going to sell the market. So that is that line up here. EOJPY. On this EOJPY, okay, I have a setup there. Right. Okay. Let's delete all this and start all over. On EOJPY, alert is there also. Delete. Okay. We can see that market swept this high as a contraction, which we expect market to do what? To come back to this low. Yes, that's reality for you. Then we expect the retracement to happen. That's monthly time frame, right? So weekly time frame will show us where and where to expect. Now on this weekly time frame, we have this supply zone here, which market is inside the supply zone. Let's see daily time frame. If okay, on this daily time frame, we have this zone as our supply zone, which market is almost there. Okay, market is almost there. So we expect market to go back to this level and then sell the market. So from 4 hours time frame, on this 4 hour time frame, what are we expecting on 4 hour time frame? We expect markets to come back to this level because we have supply zone here this is one supply zone. Market has used the supply. Now this is the new fresh supply zone that market has not been used. So we expect market to come back to this level and then sell this market from there. So that is that about euro JPY. We expect market to come back to this, then we sell the market. And where is the market going? As a swing trader, we expect market to from this swing to the swing down. But as a day trader, you can target 1:3, 1:2, 1:4, 1:5. So as you like. But swing traders, they are holding their trade from there to here. So that's that. GJ, GBP, JPY. On this GJ, let's check what do I have on DJ. Let's check from Jesus. I see something now. Wow. Okay. Markets give us a liquidity above this level, right? What are we expecting to see is for market to come back to this level? Let's see monthly time frame. Wow. Wow. Okay. We expect more push to the downside. Let's see if we have the confirmation already. Okay. Now on this we have confirmation for the sell already. Market is going to sell, which market is inside the sell. So now market has come back to the supply zone. Then we have new supply zone here, which is this on weekly time frame, which market is inside already. Let's check daily time frame. On this daily time frame, we can refine this supply zone to this level so that the stop loss will not be much. On this 4 hour time frame, this will be our supply zone. This will be our supply zone. So let's watch out on this. This is another opportunity for us to swing trade this market. This is another opportunity to see something like this. So we enter our market instantly. This for confirmation entry. So this is another entry for us, another setup for us. NZD USD. NZD USD. Okay. To NZD USD. What can we see on this is that markets on 3 months time frame, market reacts off this supply zone one. Now markets give us market reacts off this supply also. So we expect more push to the downside because we have swept this high. Let's took this high and then this low. We want to work with this. That's 3 months time frame. On monthly time frame, so as you can see, markets has closed bearish below this level. Then we have all this as a supply zone, all this level as a supply zone, which we are going to refine as we are going moving on lower time frame. Now the refinement has come back to this level, which we have this level as our as our supply zone. Let me see if we still have this one. Market has used this supply. Now, I mean this supply. Now we expect market to come back. And then additionally, we have this breaker block here. We have this breaker block here also. So let's see daily time frame. On this daily time frame, let's see what is happening. Okay. On this daily time frame, we have this inside bar candle, which market is has entered inside already. So we don't expect market to come back with the new supply zone, which we expect market to come back and say. Let's check our 4 hour time frame. On our 4 hour time frame, we have this zone as what? As our new supply zone. This is our new supply zone that we expect market to come back. So we want market to come back to this level, then we sell. So, so we expect market to come back to this level, then we sell. So I think I mark out where the market is going. Yes, this this as a swing trader. So the stop loss should be above this level. Then the target the nice low. So that's that about GJ and BTC. GJ, I think I've checked GJ now. Yes, we have checked the GJ. Yes, this is the GJ. This is the GJ. We expect market to come back to this level, and then we say so. Yes, that's that's about GJ. So I think that's all about today's analysis. We have checked gold, we've checked USD JPY, we've checked AUSD, we've checked NZD, GBP, USD, we've checked DXY also, GJ, GJ, GBP, JPY, yes. This is GBP, JPY. Now, to start afresh, let me do it from monthly time frame. We have CRT, right? From this CRT, we expect market to come back to this down, or even 50% of the what of the candle. Now, monthly time frame. What do we expect? We expect where we are hoping to see where to see the supply zone so that we can sell the market. So on weekly time frame, you can see that market give us what change of character here. This is bearish engulfing downside. So we expect market to come back to somewhere around the level. Now this will be our new supply, right? Which market has been working, which market is inside the supply zone already. So I don't want to mark it out so that it will not be off. So I have to delete it back. Now as we are refining it, we refine it to the lower time frame, which we said this will be our supply zone, right? Because all these places are inside bar to this candle. We even add this long candle join. So on our 4 hour time frame, 4 hour give us this supply, this last bullish candle as a supply zone, which we said we are ready to take this one. We don't want to refine anything again. So until market reach this level, we look for opportunity to enter this market, then we sell. So once markets react, give us reaction, confirmation entry on this level, we are going to sell this market to where? To this low or 50% of the candle. Is that this low of 50% of the candle? The TP will be the full TP will be here, and this the half TP, the first TP will be the low of the middle of the candle, which is this. Let me put it like this. So that's that about that. Do you understand now? So about that UJ, we explain UJ also. We have explained UJ already. UJ, let's see what do we have on UJ. Okay, I think I told us that we expect market to. Okay, we haven't explained anything about UJ. Let's see what do we have. What do we have on UJ? Okay, we said all this line, this build up, these are build up liquidity. Okay, let's see 3 months time frame. Okay, I think what we expect here is we want this market to give us reaction here because this is our what our order block. This is our order block. We expect to see reaction. If market want to react from here, it should close below this low. I think this is below the demand. Okay, yes, below this low here. Or market should sweep this high, all this liquidity high, give us external liquidity. Is either change character here and give us entry to enter, or sweep this external liquidity, buy side liquidity before give us confirmation. That's why I put all this direction arrow that is either markets give us a close as a contraction here, just sweep this place and close inside back, or change character, close below this level. So this would give us okay, this market is about to sell. We know that we want to sell this market, but not yet time. So we expect market to give us some reaction like this or this one. So is either market give us that one or this other one. Where is it? This market should come like this, close below, then we now look for way to sell. And reason why I put this line is this again and buy. Although markets will come back to this level and before any reaction. So from here we still expect more sales. But there are build up liquidity above below this, expect more sales to the downside. And where is the sale going? We expect it to go more down. So that's about USD JPY for now. So I think we are done with this analysis. So we meet next time. So good, have a good day.